Welcome back to the Daily Crypto Roundup. Today we're covering some very important stories moving the market right now. Coinbase striking a deal for the Echo investment platform, Galaxy Digital surprising Wall Street with stronger than expected results, Bitcoin's pushback above key levels and why it's stalling, Kraken's derivatives grab in the US, an alt rotation where XRP and Zcash briefly outpaced Bitcoin, and the very short-term catalysts behind today's little surge. If you're listening, tap follow and drop a 5-star rating. It genuinely helps more people find the show and keeps independent coverage alive. Before we dive into the headlines, let's get the numbers exactly where they are right now so you can anchor the rest of the episode. Bitcoin is about $110,496, with an intraday range roughly $107,538 to $111,647. Ethereum is near $3,947 on the day. BNB trades around $1,090. Solana is roughly $189.31. XRP is sitting near $2.45. Cardano is around 66 cents. Dogecoin is 19 cents. Tron is 32 cents. And Avalanche is about $20.23. That's your live tape. And yes, today's move was a grind higher, not a melt-up, with breadth still mixed. Let's talk about what just happened and why it's interesting. The first nudge came from the infrastructure side. Coinbase has signed a deal for Echo, a crypto investing and tokenized securities platform, in a transaction valued around $375 million. It's not a headline that sends retail sprinting, but it's exactly the kind of plumbing story that re-rates sentiment, because it says the rails are still being laid. If the largest US exchange is buying tools to funnel capital into on-chain fundraising and structured product flows, it's a statement. The next adoption push won't just be memes. It'll be professionally packaged exposure. That's the kind of story allocators watch, and on days like today, it can be enough to tilt the order book from sellers to buyers. That dovetailed with numbers out of Galaxy Digital. Their latest print beat expectations, and the stock popped on the day. Now you may be asking, why does this matter in the crypto world? The answer is, because banks to this ecosystem, trading, custody, structured notes, and prime broking, are the bellwethers for institutional appetite. When one of the bigger listed shops puts up stronger trade revenue and OTC flows, it usually means the quiet money is back nibbling, not nuking. Add that to Coinbase's M&A signal, and you've got two pillars of infrastructure confidence in the same news cycle. That's the soil rallies grow in, even if prices look choppy intraday. Price-wise, Bitcoin wrestled the $110,000 handle back, tagged above it, and then hesitated. Technicians will tell you the obvious levels, a shelf near $100,000 as the place where dip buyers have been camping, and resistance building in the $115,000 to $117,000 pocket as the band that keeps capping momentum. The move you felt today was that tag and fade dance. Reclaim a level, trigger some systematic buying, and then stall because flows aren't broad enough to run. It feels bullish in the moment, but it's the kind of move that demands confirmation over the next session. Now we layer in the interesting one. And it is interesting because it speaks to future product scope in the US. Kraken has been building out its regulated stack, and reporting points to a push into exchange-listed derivatives via acquisition. The sort of transaction that can give them designated contract market status and unlock a bigger, cleaner onshore futures franchise. If Kraken stands up more compliant perps and options on US soil, that's a competitive jolt that tends to tighten spreads, deepen order books, and make it easier for pros to keep risk onshore. In plain English, it's healthier market plumbing, and that's bullish over the medium term, even if price doesn't instantly moon because of it. While all that was happening, a subtler rotation brewed under the surface. We saw runs where XRP and Zcash outperformed briefly while Bitcoin chopped. That's classic post-liquidation behavior. Traders hunt narratives and relative strength while the benchmark catches its breath. It does not mean new leaders forever, but it does mean alt beta can light up when the market isn't scared of its own shadow. Episodes like that are also a psychology tell. When participants are willing to rotate, not just reduce risk, you're out of the panic phase and into the rebuild phase. So what actually lit today's 2-hour blip? Stitch those pieces together. Infrastructure confidence from Coinbase's Echo deal. Check. A listed crypto bank showing better than feared numbers, check. Bitcoin reclaiming $110,000 and tagging stop-ins, check. And an alts can breathe message from the XRP and Zcash relative strength pocket, check. That cocktail doesn't produce a face ripper. It produces the steady, reluctant grind that you felt on your screen. That's often how recoveries start, not with fireworks, but with fewer sellers. Let's knit this into what matters for your portfolio. When the tape behaves like this, institutional headlines, better plumbing, constructive but not euphoric price action, the edge usually belongs to consistency. Scale entries, avoid chasing vertical candles, and use the obvious levels for risk. If you're trading Bitcoin, the $100,000 to $101,000 zone remains the line everyone's watching as, don't break this. And the $115,000 to $117,000 band keeps showing up as, earn your breakout. For Ethereum, the bigger picture is the $3,800 to $4,100 range we've been chopping in. Above that, you attract flows from the rotation back to quality crowd. I also want to put a spotlight on something the headlines won't tell you, but the tape does. Breadth is still uneven. Look back at the top 10 we read out. Bitcoin up modestly on the day, Ethereum slightly down from the session high, several majors flat to red. That's what a market looks like when it's healing but hasn't flipped the greed switch. In that environment, you get paid for patience much more than bravado. It's why systematic dollar-cost averaging still beats most discretionary trading for non-pros across these stretches. Let's circle back to the Coinbase echo angle because it shapes the next few months. When a top-tier exchange bolts on a platform that helps issuers raise and route capital into tokenized products, it's a tell about the direction of travel. Tokenization, structured on-chain raises, and tighter primary to secondary market loops. The last cycle's lesson was that you cannot build a sustainable industry on leverage alone. The next cycle's lesson will be that compliant issuance and cleaner rails are the new alpha. They pull in pension and endowment money without the drama. The market is sniffing that out in real time, and Galaxy's beat matters for similar reasons. Trading businesses don't post better numbers unless counterparties are actually transacting. That tells you two things. Volatility is being monetized again, and institutions are comfortable enough to put risk back on in size when prices dip into their zones. If you've wondered whether the suits were gone, no. They were waiting for spreads and fees to look attractive. They're not aping meme coins, they're arbing basis and warehousing flow. But that flow props up liquidity for everyone else. Now to the why did it stall bit. Because it did stall. The same technical piece that flagged $110,000 also flagged the ceiling a few $1,000s higher. And that's where momentum wheezed. Markets don't blow through resistance on vibes. They need either a flow catalyst, think ETF net inflow spike, or a macro catalyst, cooler inflation print, softer dollar, better liquidity. We didn't get that today. We got structure headlines and inch-forward flows. Good, not great. Hence, tag, breathe, reassess. Let's add one more angle you asked for. An interesting story that isn't just price, but direction of product. Kraken's regulatory push via US derivatives access points to a near future where onshore, fully compliant perps and options coexist with the offshore leviathans. That matters for listeners because it broadens the venues you can use without taking extra jurisdictional risk, and it tends to attract more conservative capital that previously sat out. It also pressures everyone to up their game on margin controls and liquidation engines. Lower tail risk is good for all of us. And yes, the rotation pop in XRP and Zcash deserves a realistic frame. These spurts are rotation, not revelation. They tell you traders feel safe enough to explore beta, but they don't tell you a new market leadership has been anointed. Treat them as signals about sentiment, not instructions to chase. If you want exposure there, scale in instead of sprinting. Let the market prove it can string together higher highs on volume. Back to the question we opened with. What likely set off the little surge in the last couple hours? You had a 1-2 from infrastructure growing up, Coinbase deal prints, and CryptoBank isn't dead money. Galaxy numbers. You had Bitcoin tag and hold the first meaningful level that turns heads. You had enough traders willing to rotate into XRP and Zcash to tell you the scary bid/ask gapped wounds are healing. and you had nothing blatantly bearish hit the tape to ruin the mood. That combination isn't fireworks. It's scaffolding. It's the stuff that lets a market climb without drawing much attention. I'll close where we always do. Protect the stack, plan the trade, and respect the levels. If you found today's breakdown useful, follow the show, drop a 5-star rating, and share it with someone who wants signal, not noise. We'll be back with the latest moves and the stories that actually change how the money flows. Until then, stay sharp, and we'll see you at the top.